This is our Forex blog for June 26, 2012, and we have a three-step easy Forex trading system. This is our currency meter that statistically shows you which currencies are strong, which ones are weak. It's sortable, which means you can link these two charts and sort them from strongest to weakest, or weakest to strongest. And then you can see the Australian and New Zealand right now are the strongest. The weakest are the Euro, Swiss, and the dollar is trending down versus 100% of other pairs at this moment. The real-time trend is on the top in histogram form. Underneath that we have the 15-minute trend, hourly, daily, weekly, monthly. The more time frames that are up and the ones you're looking to buy versus the week that are down, the better off you're going to be. So the first step, again, is identify the currencies most likely to trend up or down. I'm going to put this in order to see the dollar and the yen. You can see the yen was quite strong earlier today for the vast majority of the day. You wanted to find a weak currency to trade against the super strong yen. The euro was weak and the Swiss was weak, so we'll start with the euro. You're looking for sells in the euro yen. You can see by looking at the chart the daily, weekly, monthly trends down. It had earlier today broken from below to above the hourly moving average, and usually when that happens and you can see a false or failure to make a higher high after it retests that area, at this point right here it's very likely to go down. You might look for a sell here where you have a loss, a sell here when it breaks the hourly moving average again. You can see it fell from 48 all the way down to 11, 38 pip move once that area got broken. So if you lose 8 pips and then you make 38, you've netted 30 on 2 trades. One tool that we're releasing today is our value profile, and this allows you to see, in this case on the daily chart, but it works intraday on whatever time frame chart you want. The longer the better, because it really tells you, it lets you look inside the bar and see where most of the activity happened. The middle line is the point of control, the upper value area and bottom value area. Typically when price breaks below the lower value area, you get a move down. When it's inside the previous day's value area, it tends to be choppy. You can see the day before, the value area is right here. As soon as it broke below 100.73, it very quickly broke below through the low, which was 40 pips lower. It allowed you to get short 40 pips earlier. And so basically today, as long as if it goes back into value area and it's underneath 99.56, which is the point of control of yesterday, you can look for sells above that. You might want to just really wait for it to break above the high here before you buy in this particular pair. But 99.56 is the key number. It happens also earlier in the day to be right around where the hourly is. So as long as it's underneath that area, you want to look for sells. The lower containment bands tend to be areas where the price, runs out of steam and reverses. That's why we call them containment bands, especially the white 2.0 level. Notice how it hits that level and reverses, hits that level and reverses. Once you find a strong trend, you're usually better off waiting for a decent sized pullback, 20, 30, 40 pips. In this case, it went from 91 all the way up here to 33, about a 40 pip pullback. You can also draw your trend line underneath the bar's lows, and once it breaks that trend line, you go short. Or a lot of traders are, wait for some sell signals, so then wait for the price to break the trailing stop and you get short. You can see you would have had a very small win on that one. You have another sell signal right here where you go short at 11. You got out of that at 99, so you made 12 pips on that trade. And again, use our real-time tools too. Anytime you see it fall down with a lot of weakness, go up with very little strength. Always want to draw your fibs off the entire wave just so you get an idea of where pretty high probability retracement is. Most times, 38 to 50% retracement is a good place to look for before it becomes, safer to sell. So it came back up just a few pips away from the 50. That's my preferred choice. I don't like to sell at or underneath the 38%, but I like to sell somewhere in between the 38 to 50. And if it's going up with a little bit more strength than this, I'll get short at the 62%. This is where the safest short is. And, when you get that sell signal, because it's pulled back enough, you can just simply sell when it breaks those bars low here at 26. Then when it comes down and kind of double bottoms right here, isn't able to make a lower low, you can get out with a 15 pip profit. Short again here, and nice 15 pip profit on that one. Let's look at some of the other currencies that our tools showed you look for buys and sells today. You can see earlier in the day that New Zealand was quite strong, and it also became strong at 11:30. The dollar was very weak at 11:30, so looking for buys in the New Zealand dollar after 11:30 makes sense. Here's the value area for the New Zealand dollar yesterday. You can see big day down, pulled back a little bit, tried to go lower, wasn't able to go lower, wasn't able to significantly go below the previous 2 days lows. And the value area high on this particular currency was 78.76 for the previous day. So anything at and above 78.76 is, a higher probability for looking for buys. And you can see that's somewhere right around here. And notice it's not a coincidence that the market ran up to that level and really had trouble getting above it for about an hour, hour and a half last night. And once it broke above there, the trend's pretty clearly up. You could have bought that pullback here, bought the buy signal right here. You can see those both resulted in 20, 30 pips of profit. Pull back to the hourly. If you had bought right here, it did go up about 15 pips before coming back down. The second buy signal did the same. And knowing where the value area is, you really don't want to look for sells until the price gets back into the value area, or preferably below today's point of control or the previous day's point of control. In the New Zealand dollar, here it is. I'll bring it up here right now. Yesterday's point of control was pretty close to where the value area high was. So if it goes below 78.70 or so, approximately, you could have some potentially good sells today, but it wasn't able to get below that area, so you focus on buys. And anytime you have a pullback that has a lot of weakness like this, it doesn't, it makes sense to sell it right here, but the value area is so close to there's likely to be major support underneath it. You're not likely to make a lot of pips until it gets underneath the value area low. So you certainly could take that trade right here, but notice as it's coming back down, it doesn't have that much weakness. It's above the 78.76 to 78.70 area, which is pretty much the buy area. And so when it comes back above the hourly, you might have went long right here, or after the first pullback, but when it broke out above these bars high right here, you can see it went from 17 all the way up to 32. It doesn't take more than 10 pips per day, every day. It's 50 pips a week, 200 pips a month, to double your account every 2 months using small 2% risk per trade. So the value areas on the daily charts, and you can also use those intraday as well. Let's take a look at a 30-minute New Zealand dollar value area bar. Notice if you are looking to buy that pullback here on the longer time frame chart, the value area is somewhat in the middle of this bar. You don't need to wait. Well, in this case, it closed up at the high, but a lot of times it closes down. You don't have to wait for the high of that bar to be broken. You can just simply buy it when it breaks the value area high. As long as it keeps making higher value areas, you can see that's what happened pretty much here. It's likely to continue up, and that's exactly what happened. It had a move up, pull back, 2 half-hour bars that kind of went sideways. The value areas are pretty much inside each other. All the activity pretty much happens inside the value area, the majority of it. And when it breaks out right here, it's very likely to go up. And you can see that's exactly what it did. When it came up to the high here and started printing a lot of activity at 79.27, as soon as it started to come back down, you'd want to get out. But, this one didn't have the most volatility today, but it did make a nice 15 pip move up that the value area kind of sort of predicted. Usually when the value areas are in the middle of the range like that, when it breaks out of those, you can get into breakout trades, especially if it's in the direction of the trend. This one's up, it's above yesterday's value area, and it popped to the upside. A lot of traders, I would recommend using 4-hour bars on this. It gives it enough time to really put into place, where the value area is, and you're also going to much more likely catch bigger pip moves off of 4-hour bars. This next area right here opened inside the value area of the previous bar, and once it broke underneath 79.10, it was likely to fall. And notice it fell from 79.10 all the way to 80. That's a 30 pip drop on a currency that really didn't move that much today. It was a very low volatility day for the New Zealand dollar. So, using longer time frame bars, you can catch some bigger moves. Notice the pullback went up and sideways here. A very balanced bar where the value area was in the exact center of the bar. Breaks out above here and caused a big move. So you can use daily 240 and maybe even down to 60-minute value areas to increase your odds of trading on the 5 or 6 pips per bar range charts. You want to kind of avoid or at least focus on pairs like the yen that were clearly strong most of the day on all the time frames, and especially the daily and weekly trend were up. The dollar, really had a daily trend that was down. The weekly, monthly trend's up. The real time for much of the day was up. The 15-minute trend shifted up. The hourly trend never really shifted up much except for, around 9:30 right here. It's always harder and usually more choppy markets when you're trading different trends that on different time frames that are going in opposite directions. But if you do see a lot of strength on the way up followed by very little weakness on the pullback, usually that momentum continues. In this case, it only did for about 30 minutes. You had an hour of weakness, then it continued. This is what typically happens. A lot of strength, very little weakness, the strength returns. You can see here for a nice 30-minute time frame. That allows you to catch those 10 to 30 pip moves in those directions. So the dollar was strong, the Swiss was pretty much weak across the board. So you could be looking for dollar Swiss buys as well. Here's the dollar Swiss daily chart. You can see yesterday's, value area pretty much contained the whole day. Most of the activity happened here at the bottom. The point of control where the most activity happened yesterday was 95.81. Above that, it's slightly more likely to go up than down. And here's the value area high, 96.16. Above that, your odds of it going up is a little bit higher. You can see on the chart here, I'm going to draw that. Notice all the choppiness that happens, and it had a false breakout here, and it broke above that 98.16 and went up about 25 pips here, pulled back into that area, which again, it is real support. This is because traders have a lot of positions in this area here, and so when it breaks out, they're likely to defend their positions and buy. Traders that were short that area, when it goes up against them, they're losing money. They're likely to try to get out of their losing trades at break even if they have a chance. That's why the first time back down to that area, that's natural support. You can see it went up again, 35 pips the second time. So you had a nice 20 pip move the first time, up to 35 pips on the second trade. And again, the upper containment bands are pretty much most of the time where the momentum stalls. So these buy and sell signals on here are based totally on the range bars. And if you see one that is up near the upper containment bands, it's a higher risk trade. It's less likely to work, and it's less likely to give you a lot of big pips. So it's up to you whether you take these trades or not. I just want to label every single bar. I prefer to wait oftentimes for 2 wave pullbacks. So in other words, if I miss this first move up right here, here's a pullback, second wave of the pullback, it's a much deeper pullback. It's 25, 30 pip pullback, and it's also right near the hourly moving average, which frequently is the end of the move. You could, buy it right here when it breaks out, put your stop a few pips underneath the bar's low right here. It went a little bit your way, came back down, didn't stop you out. As soon as it goes up, you really want to move your stop to break even as soon as you can. And when it stalls out right here, I would have probably got out somewhere around 96.30. I would have been long here around 18 for a 12 pip win.